Well, let's get into it. So, huge day for you guys, potentially the biggest in daylight history. $75 million raise led by Framework Ventures with participation from A16Z, Crypto, EV3, a bunch of other folks. And that was split into 15 million of equity and then 60 million of debt, which was led by Turtle Hill Capital. So, maybe let's break the two rounds into two, right? Like, what was the motivation behind the equity round and how did it come together? What's like the backstory of that piece?
Yeah, I think the framework guys participated in our first kind of Series A1 led by A16Z Crypto. We had kind of a smaller position in that round available, and they joined the Daylight team at that point in time. And shortly after that, they were really excited about where we were going and the vision and kind of how we wanted to scale Daylight. And so us and the framework team, kind of came to terms on a new, if you Series A2 or kind of strategic financing round. Those closed actually earlier this year. We brought in some new firms. Framework took a bigger position. A16Z participated again. And yeah, it was I think one of those kind of rounds that's really nice and like a big vote of confidence when insiders in your cap table are looking to, come in and participate in a big way. It makes it nice as a founder where you're not doing the full roadshow. It's like legitimately just two partners discussing, kind of the future of the business. And so that came together that way earlier this year. We're just now announcing it as kind of part of the combined raise, but yeah.
Yeah, that's awesome. Sounds like it was kind of like preempted, which is a word a lot of founders have stated before. But it is nice to not have to do the whole roadshow and to have that preempted or that vote of confidence. What do you think if you had to put yourself in the shoes of a framework or some of the other folks in the equity round? What do you think they saw that led them to be like, it'd be great to put some more money in here, even if Jason isn't necessarily asking for it? Like what do you think they saw in terms of like growth of the business or target markets changes?
Well, I think it's kind of, yeah, it's multifaceted, but one I think is energy is very clearly one of the most clear markets that needs to scale in order to unlock the next super cycle of AI, of robotics, reshoring of industrial capacity, American dynamism. None of this stuff works if we can't double peak American energy production. And so we got to figure out ways to do that. And every investor really is looking for an energy strategy now. And we obviously have a very differentiated one, being really the only company that's working at the intersection of crypto and internet capital markets, if you will, and energy. I think the other side of it too is at the same time, the framework guys specifically are some of the best when it comes to DeFi. They've been in the DeFi game since the beginning, not just as investors, but as participants. And they understand really deeply where DeFi markets are going. And that very clearly is towards differentiated assets with uncorrelated yields to on-chain products that can sustain market cycles and sustain attention and can sustain yields through market cycles by nature of being something that's tied and connected to the real world. It's kind of, DeFi 2.0, it's real world asset 2.0. It's kind of these big portfolio approaches to scaling in markets like GPUs and compute, like energy. And they were really excited about that vision how we wanted to really deploy Daylight in that fashion. So it's probably an intersection of those things.
For sure. And then maybe let's talk about the $60 million debt vehicle. So who is Turtle Hole Capital? How do you come in touch with them? And, one, it's just very unusual, right, for a crypto startup to raise a debt vehicle. So I know that probably stems some from your background and your experience, but yeah, let's talk about the debt vehicle now and kind of how it came together, what you plan to use it for, how it's integral to the business.
Yeah, classifying as debt is probably like the incorrect classification. Really, it is a dedicated project finance facility for scaling infrastructure on Daylight's network, which means that this is not debt in the traditional sense of corporate debt, where it's secured by the assets of the company. It's project finance that's secured by infrastructure assets directly, so solar and batteries. And it's held in kind of a clean holding company where we hold infrastructure assets and monetize tax credits separate from the existing corporate umbrella. And so this is really like a project finance facility dedicated to deploying assets and bringing them onto Daylight. And the reason that's so critical is I think when you look at a lot of DeFi projects that are looking to scale RWAs, they typically start by attempting to catalyze DeFi capital and then figure out how to deploy it. And that's kind of a broken market structure. You build a lot of hype and attention, then you generate some kind of capital formation, and then you're like, okay, we need an origination strategy, we need a capital drawdown strategy. There's going to be a cash lag between yield. What's really interesting about the way we did this is we built this project facility where it's kind of off-chain, dedicated private credit for Daylight specifically, we can go and spin up our origination flywheels. We can put infrastructure assets on the network. We can embed that financing product directly with solar companies throughout the US, and we can start to generate yields and revenues from this infrastructure before we launch the DeFi facility directly, which means that once the DeFi facility is live, we can have a very calculated approach to how we start to scale in yield and originations directly into that facility, rather than trying to work backwards while managing a pool of capital on chain.
Yeah, so the facility is basically a way to get this whole economy going before you turn on any DeFi components and show that it works and show the yields.
And most importantly, originations. You need to be able to deploy the capital that you secure. But there's a chicken and egg problem in capital formation. It's once you have the capital, you have to deploy it, but you need to be able to prove that you can deploy it before you form it. And so this allows us to go out and start to scale those originations and scale deployments and get to several thousand kind of homes and buildings connected directly to the network from this capital alone before you start to turn on the DeFi engine.
Yeah, and let's maybe walk through a quick example for our listeners of the vehicle itself, right? So like Turtle Hill contributed the $60 million to the special vehicle. You guys obviously have a say in how the funds are used, but what is the money being spent on? Kind of like what's the flow of funds in terms of like yield and revenue, profit back to the vehicle, all of that stuff.
Yeah, you think about it as infrastructure, right? So it goes directly into the projects. It finances the equipment. It finances the installation. It finances the customer acquisition. Everything that goes into a completed distributed energy project, that capital is deployed into. And then the customer signs we call it an energy subscription, but in the kind of energy parlance, it's a power purchase agreement, which basically means the customer subscribes to buy power from Daylight instead of buying power directly from their utility at a rate that's cheaper than their utility. So they don't actually own the asset. The SPV owns the asset. The customer buys the power. They get access to the backup power from the battery. But they don't have to take out a loan to buy a $25,000 piece of hardware. They don't have to pay cash for it. They just get the benefit of more affordable and reliable power, and the network gets a host that gets to host the infrastructure that kind of generates the economic flywheel, and the revenues flow back to eventually the on-chain DeFi product. Those revenues really come from three core sources. It's monetizing electricity, so it's an offtake agreement, that PPA contract with the homeowner. It's virtual power plant revenues, so taking all of these deployments and aggregating them together and offering them to power traders, to energy companies, to utilities, to the power markets broadly, to take that energy and arbitrage directly with the power markets and generate kind of merchant revenue. And then the last is state, local, and federal tax incentives, rebates, general kind of clean energy incentives. And all of those three revenue sources flow back as revenues back to the SPV.
Yeah, and then I guess to walk through from like a homeowner's perspective, so maybe a person in Daylight uniform knocks on my door. Maybe I hear about you guys some other way, but I say yes to the Daylight subscription. So instead of paying my utility, I then get solar and a battery installed on my roof, but I don't own that asset. Either Daylight or the SPV does. And then I can pay my regular utility bill, but it'll be a bit cheaper because I've got solar and a battery. And when that solar and battery is tapped in like a virtual power plant kind of sense or a grid dispatch sense, the revenue from the asset that's on top of my roof, instead of it going to me, it goes to the vehicle or to Daylight or to kind of a DeFi machinery in the future. Is that right?
Exactly. That's exactly right. Yep.
Cool. Awesome. So Daylight subscriptions. Let's talk about DayFi now, because that's also a new kind of announcement. I think that came out today. So it's a stablecoin protocol that connects DeFi to energy systems. How does it work in practice? Like, what will it look like? Where will it be deployed? Just kind of tell us a bit about DayFi specifically.
Yeah, the closest parallel that exists today is what the team at USD AI is doing, which they have a really exciting protocol that's using on-chain capital formation to fund GPU collateralized loans for neoclouds. And so basically they're generating kind of compute-backed yield that is flowing back to depositors in their yield product. Daylight's similar to USDAI. It's similar to Syrup USDC from Maple. It's similar from a lot of these on-chain strategies that are looking for uncorrelated and differentiated yield sources. There's basically a base asset, which is a stable coin that is deposited directly into a yield contract. And when it's deposited into that yield contract, capital is lent against an on-chain note that basically the PPA collateralizes. So it kind of legally collateralizes against the PPA. And then revenues from that PPA contract and the virtual power plants flow back to the vault and are distributed back to yield vault token holders, similar to any smart contract yield product where there's an ERC 4626 yield vault.
Got you. Let's bubble that up to a level that's a bit maybe easier to understand for the average person. So like, is this connected to
Deposit stablecoins, get energy.
Yes. Okay. So it's a way for investors that want to allocate capital to get yield on that capital. They have stable coins, they have USDC, USDT sitting in a wallet. What do you think the yields will be in terms of like how competitive they'll be with other yield opportunities on chain, and what are kind of the unique characteristics of this yield opportunity versus just like lending my stable coins to someone else and earning 4 or 5% or something?
Yeah, I'm not entirely sure what I can't say at this point on like performance or whatnot, but you can think of it like any outperforming most kind of current strategies that exist in DeFi. It would be, attractive high yields. And it's differentiated because, it's an uncorrelated source of yield from a net new asset. Investors anywhere in the world today really can't get access to electricity directly. You can get access to electricity beta by buying, investor-owned utilities, their public stock. You can buy independent power producers and their public stock. Unless you're Blackstone and you're investing directly into power producers and power plants, you can't get access to kind of the underlying yield stream. And this tokenized yield product is basically an effective representation of that from a distributed network of power plants.
Right. And so when I deposit my stable coins that are in yield, as you said, where are my stable coins going and how are they used?
Exactly the same way we described that fund flow earlier. So they're drawn down, invested in energy infrastructure. Energy infrastructure generates revenues. Revenues are deposited back on chain, either distributed out for redemptions or reinvested directly into new projects.
Got it. So DeFi is the DeFi version of the $60 million special vehicle.
$60 million you can think of as the off-chain version of what we'll be launching.
That's super cool. So then does DeFi only launch like once a lot of that vehicle has been drawn down or once it's shown results, or what are you thinking about the timeline for?
No, it'll be much faster. It'll likely
Q4,
be,
right?
Yeah, exactly.
How were you able to come to such a level of confidence about how this whole system would work and the potential yields, and be able to convince like Turtle Hill and other folks to contribute? Was it because you've done a lot of this kind of modeling in a past life? Was it because these things already exist in the real world today and you could just see how they perform? Like,
it's all of the above. Yeah. So there's already a niche securitization market around distributed solar. Sunrun does, $1 billion securitizations a year, maybe a little bit more. There's kind of a few large banks that buy those securitizations typically, but you can see the performance of those assets. It's also, assets that are relatively easy to model. There's contracted revenues, there's contracted equipment costs. It's not like a traditional operating business where OpEx can fluctuate, right? It is businesses with a high percentage of the revenues are contracted, and the costs are known. So it's and then you're secured by the assets themselves. So there's a lot of safety in these types of products. But yeah, you're right. I mean, there's a lot of kind of traditional finance that goes into underwriting these assets.
Got back into the Excel sheets, I'm sure. I think it's kind of gone under the radar a bit, but you guys have started to launch in a few markets. So maybe talk to us a bit about those geographies, why you chose them, and then how you go about choosing geographies in the future, and where you're thinking about expanding to next.
Yeah, so we look for an intersection of really where the market, I put a tweet out the other day, but it's where the market tells us there's a need, whether that's a lot of attractive rebates and programs from the utility to generate additional revenues on top of the base contracted revenues, or where power prices are very, very high compared to market averages. That's what we look for, and we look for kind of where those circles intersect, and that's where we choose to deploy. So the Northeast, in our opinion, is the most attractive market when you look at those circles today, and that's why that's a lot of our focus. So we'll be expanding across the Northeast and then expanding throughout the U.S. based on where we feel most comfortable on our ability to perform, and also where the community is telling us to go. I think one of the interesting things about as Daylight decentralizes and becomes more of a community-owned network, you start to see participation and demand from the community in certain areas that's a great way to prioritize where new deployments are. You can start to activate markets based on the community's own demand for the product. So I actually expect this to be pretty community driven once you roll out the first couple of states.
Yeah, a lot of different factors that sound like they influence it, but that makes sense. Zooming out a bit for a second, maybe, how does the energy requirements of all this AI infrastructure impact, your business and also where you're thinking about launching next? Because I would assume it's somewhat hyper local at times, and AI build outs have impact on local markets. But does that impact, daylight and impact how you think about where you're going to deploy next?
Well, I think the macro trend is like the most important, which is power demand across all grids is skyrocketing, and there's a need for new capacity on every grid. Peak demand is estimated to kind of be doubling over the next 10 years. And we're one of the most scalable ways to go out and solve that problem. So whether we're locating directly next to a data center or not, doesn't really matter. We're still contributing to the broader physical network, which is the grid, that all of these systems are attempting to plug into, and all of these systems are running up to kind of available capacity constraints. Um, so, you look at Bloomberg's run a few interesting articles just on how data centers are increasing the price of power today. Power prices are rapidly outpacing inflation. And that's kind of a general trend we're seeing across every major power market.
Makes sense. And then maybe you can say something, maybe you can't. Is there any plans? Are there any plans for a token? Do you have any idea when that would be? Do you have any idea which blockchains all this will be built on? Can you share any alpha with the community here?
Yeah, I think, yeah, I'm not sure what I totally can and can't say, but I think we've been around the deep in space long enough to know that, these things really supercharge and scale when you let the community kind of take over ownership. So that's our intent, is to transition to, decentralized network over time. And we'll be in the EVM. We are big EVM believers. I think that a lot of chains have different product market fits, and founders should be selecting chains based on where do you think your product will align with that chain's general product market fit. What I mean by that is Solana, which is a fantastic chain and community, and where a lot of deep-in projects are built, is a trading product market fit ecosystem. Most of their big applications are trading based. In fact, all of them are trading based. And when you look at the actual outstanding lending TVL on Solana, it's actually lower than even just specific applications in the EVM across the entire ecosystem. So if you're looking to build something that's built around lending, yield generation, looping, passive strategies for managing yield, you probably want to look in the EVM, where there is a huge amount of stablecoin capacity. There's a huge amount of capital, something like $80 billion, maybe more, locked on Aave. Morpho has tens of billions of dollars. All of these are looking for you can work with curators who will build kind of auto strategy vaults throughout the ecosystem, and are doing this for several projects. It's just a more robust ecosystem for forming TVL and liquidity around a yield product. And since that's so core to what we're doing at Daylight, we felt that the EVM was the best. So we'll be deploying kind of across a lot of the exciting chains in the EVM, which, the first two are Base and Plasma, I think, are the two that come to mind with the highest degree of product market fit and the most interesting, unique communities in the EVM today.
That's awesome. And I'm sure there's a lot of deep in folks out there that are listening that are asking the question, how do I get involved? This sounds super exciting. If they're not a homeowner, right, or they are not in a position to change the utility to a Daylight subscription, for instance, is there a way for them to get involved today? Will there be in the future? How do you think about like the deep in contributor side of things here?
For sure. Yeah. The unique thing is, like, there's ways to contribute even on a micro level. So Daylight will be incentivizing and rewarding people for doing things as small as connecting their thermostats, connecting their electric vehicles, connecting their devices. Not necessarily to manage and part of the VPP today, at least not to start. But all that data is super valuable for improving our forecasting models across the entire fleet of productive assets and solar and storage equipment that's deployed in other hosts locations. All that data is incredibly helpful for just reinforcing our forecasting and data analysis on distributed energy and dispatching distributed energy when it's valuable. So that's like step number one. Step number two is getting involved as a community ambassador. And so we candidate this a few days ago, but we're launching a program that we call the Sunny Side. And Sunny Side is for people that want to go out and basically build, effectively side businesses by supporting Daylight, franchises for supporting Daylight. That can be referring others to the platform. It can be promoting like the engagement in the local community, hosting events in the local community. And what's cool about it is we'll be paying people in stablecoins directly to their app for every kind of new system that they bring to Daylight. And we'll also eventually, that incentive model may evolve further from there. But people will be incentivizing paying people for helping grow the footprint of the network directly. And so for those hustlers that want to go out and build side hustles, which we know so many people in the Deepin community do, it's kind of a perfect alignment. We'll be giving them the tools and the education and like really nice bundled resources in order to go out and build these little franchises on behalf of Daylight.
Well, super exciting. I'm going to need a Sunnyside referral code because I think the pitch to homeowners is super straightforward. And, my dad got solar for our home when I was growing up, and it was great during hurricanes. And if he wouldn't have had to paid for it, it would have been, an even more straightforward sell. So I think it makes a lot of sense. Is there anything else you want to cover today that we haven't touched on yet?
I think we're good, man. This is fun.
Sweet. Well, appreciate you jumping on last minute for this 5-alarm fire, but glad we got to cover you guys' news, and we'll probably do a pod episode of this as well. So we'll get it edited down and out, but we've got the news out tonight, which is what matters. So
cool, man. Good luck on the race. Good to see you.
For sure. Great to catch up. Talk to you soon.